Let's discuss depreciation method in accounting. Just to be aware that there are many different depreciation methods existing in accounting. We have straight line method, then we have declining balance, also a known one. We have double declining balance as well. We have sum of years digits, then we have unit of production. So those are the most famous depreciation method that we will go through each one of them, and we see how to calculate the depreciation for the assets. Straight-line depreciation method. This is the famous depreciation method that exists and used by almost all the companies. Straight-line depreciation is a method for allocating the cost of tangible asset over its useful life. It's calculated by spreading the cost of asset over its useful life, creating accrued annual depreciation. The depreciation for this method will be accrued during the useful life of the asset. This method is commonly used for accounting purposes and is relatively simple to calculate. It's accepted by accounting bodies like GAAP and IFRS. The calculation for straight line method starts by determining the cost, which is the purchase price. Then we have salvage value. This is the estimated value at the end of useful life. Then we get the depreciation value. This is the amount that should be depreciated, which is the difference between the cost of purchase minus the salvage value. So this information is important when we want to depreciate the assets. Then we have useful life. Of course, this is mandatory to be aware how many years you will depreciate this investment. Then we have annual depreciation expenses. It will be calculated by dividing depreciable value by useful life. We have many advantages for straight-line depreciation method, which is very simple to calculate, easy to be understood, and even easy to set in the system. Predictability is allow for predictable depreciation expenses, adding in the budgeting and financial planning. Consistency, that means it provides consistent depreciation over the period time for the asset. More transparency enables stakeholders to easily understand how depreciation is calculated. We have an example for straight-line method. We have an asset that we purchase for 10,000, salvage value of 2,000, and its useful life is 5 years. So the annual depreciation is 1,600. Let's see here in Excel our assets that we have seen in the presentation. We have an asset that we purchased for a value of 10,000 and its salvage value is 2,000 and the useful life is 5 years. So for the calculation, we use Excel. Here we create a table that we put the year, the purchase value, depreciation expenses, accumulated depreciation, and we have the ending book value for each year. So here we put the purchase value. Then here we have a formula that we set where we need to calculate the depreciable amount, which is 10,000 purchase value minus the salvage value, we get 8,000. Then 8,000 we divide it by the lifespan, which is 5 years. Then we continue for our table for calculation. We have accumulated depreciation, which is depreciation for the first year. Then we get the ending book value, which is the purchase value minus the accumulated depreciation. For the second year, the depreciation will be the same, and the accumulated depreciation will be the current year depreciation plus the accumulated depreciation for the previous year. Then we get the ending book value for the second year, the same thing for the third year, until we get to the year 5, where we get the ending book value for $2,000, which is the salvage value. Here you can see that the purchase value is 10,000. The depreciation expenses is 8,000. Accumulated depreciation, which is 8,000. Then the book value, which is 2,000, which is equal to the salvage value.